Hope I am on time this session. So as you can see, the session of today is called Sector and Industry Rotation. As you might know, I have talked a lot about this, but in this session we try to go into details, and I will give you more information in order to understand this very well. Okay, so I will be waiting for a few minutes until all the guys come as usual. So I'll be just waiting for a few minutes. I will just to speak a little bit, and then I can begin. Until now, I see no one watching, so which is okay, no problem. Since I begin speaking, and then we can go into details. Excuse me. When all the guys come. So people, when they trade, hello GXG Lee, hello, you are the first one to show up. This is very good. Okay, thank you very much for coming. And as I told you, Lee, we will be waiting for a few minutes until some people come, and then we begin with our subject, which is sector and industry rotation. It's a very, very important subject for those who wants to know some secrets of the stock market. It's not for everybody. Okay, hello Tom, how are you? As I told you, this subject is very delicate. It has a lot of information. Hello Sharon, Raj, how are you? So as I told you, this subject is very delicate because it has a lot of secrets of the market that if some people grasp, they can understand at least what's going on in the market without the noise of this, what you see in what you see on the media, the TV, newspapers, analysts, and all the stuff. Okay, so when you stay out of the noise and you see the real market going, you will be understanding a lot of secrets. Okay, the market, the people who move the market are hidden. Okay, they don't go to the TV and they say, okay, tomorrow I will buy that industry or that sector, or I will buy that stock. Okay, they will never do that. So how are you going to follow these people who tells you something? Maybe it happened in the past, but we are not looking for the past, we are looking for the future. Okay, hello Nas de la Noche, how are you? You are on time this time, and me too. This session it begins very good because I come to make this software work very good. So as I told you before, this subject of industry and sector rotation is a key to understand the market. Okay, is a key. I say a key or a secret or whatever, or a hidden thing that moves the market without the reasons that you see on the media. What you see on the media is mostly advertising. Okay, sometimes they give you just an information like that. Okay, if they say, for example, there is a gap up in Apple, just an example. Okay, are you in Apple? You tell me no, I am not. So what is this information is useful for you? Okay, it is not useful for you because you are not in the market. Is where you are. okay? Where you are, what you bought is your market. This is the market that you make money from or you lose money from. It's not the whole market, okay? And even it's not the sector or it's not the industry. But industry and sector have a direct relation to your stocks. Although it is a direct relation, but it is not a guaranteed thing. You should understand that the market never gives guarantee to anyone. That's why the market is fair, okay? The market is fair because you can buy a stock as someone who is big, a mutual fund bought the stock and you bought the stock. But he is big and you are small, okay? But if the stock goes up, both of you make money. So what is the heart of doing business as a trading is to make money, okay? We are not here to just be there, okay? We are here to make money in the market. So understand that. So most of the people, they look at the major indexes that everybody knows, okay, like the Dow Jones, which is the 30 stocks, the big companies, or they call the blue chips, okay, and they are from different industries, different sectors. So it's very good. So it is it represents the whole market with the 30 stocks, okay? So this is very good because if you see Dow Jones, you understand where the market is going in general, okay? This is very good. Now, if you go to the sector, what do you find? You find some sectors are going up, they're doing good, like the major indexes, but you find other sectors that are going down. And you ask yourself, why the major indexes are going up and this sector is going down, okay? So this is here the key to understand what's going on in the market. If you understand these small things, you can have a general idea, and when you use my search, you can understand how things work better than someone who doesn't know, okay? Now, we said that, let's say the market is doing good for the 3 major indexes, which are, as you might know, the Dow Jones Industrial Average, which has 30 blue chips or big companies in America, or big capitalization, and they are from different sectors and different industries, okay? This is one. You have the S&P 500 or Standard & Poor's 500, which is the same, 500 medium companies in America, and they give you the average, okay? And then you have Russell 2000, which are small companies, okay? Small companies, and they give you the average. Now, how is the H1 weight, or how many shares from that and from that? Please don't ask, because these are some specific about the index. If you want to learn more about this, you can just go to Wikipedia and you will find all the information, but it's useless. It means you don't get anything when you want to trade, okay? Now let's say we take a sector that it is doing good, like the index or like the indexes. Will you find in this sector, hello Andreas, how are you? You find that this sector has some industries that are doing good and some industries that are doing bad, okay? So you see the game right now. So there is no sure thing from the beginning, from the indexes, the major indexes. You go to the sectors. Let's say you take a good sector which is going good, like the indexes. Now in this good index, good sector index, you will find industries that are going good with it and some that are opposite, going down. Now, let's say you take an industry which is going up. You see inside, you find some stocks going up, some stocks going down. Okay? So all this is a game. So for you, you should focus on your stock. Don't worry about everything else. Okay? You can check the industry that it is in and see if the industry is doing good. So your stock might continue doing good according to the industry. And this is what I teach in training level 3, how to search for stocks using industry index. This is the where you see my training and how to find this kind of industries, how to find stocks. It's the same criteria for choosing stocks for an industry and for the stock. But the thing is, there is no guarantee. Okay? A lot of people, when they trade opposite of the principles of trading. Principle of trading is to trade with probabilities. You don't trade with a sure thing, because it doesn't exist a sure thing. Whatever stock today, whatever it is good in the past, whatever it is, whatever people say, and the stock can go down. Okay? So there is no guarantee. So if you just take this word guarantee and sure from your head, you begin to understand the real trading. Okay? Which is based on probabilities, based on choosing and selecting good stocks. It means skills. Hello, Empty Mind, how are you? Sorry, I will take just a small little coffee and then I continue. Okay? So, if you just take out from your mind this sure thing, this guarantee that doesn't exist in stock market, you will be okay to trade with principles of trading. Hello, Muhammad Benaba. Good morning. Here it is, we are at 11 o'clock, so we are nearly midnight. Okay, that's good. So, as I told you before, that all these indexes shows you where the majority of stocks in index go. For I will give you a simple example that I have spoken of before and make a lot of videos. When you see, for example, energy sector before, 2 years or 3 years ago. Now, before that, this energy sector was doing so good. Okay? That the barrel of oil was nearly $150. Okay? Now it is $50. So it lost about 66% of its value from many years. Because when a sector is going up so good, okay, there you can find good industries and you can find good stocks. And when things goes good, okay, most of the people, they don't take actions. They don't buy from that. Because the media, they don't speak that much about it. Or they try to hide it until the trend is becoming so good. And everybody see it and the media will be talking about. Okay? At that time, I remember, if you go to energy sector, it's a boost. It means it's a bull sector there. And all the people for 1 year or 2 or 3, they bought a lot and they make a lot of money. But at the end of the trend, because we are speaking about trends, We are swing traders. It means short-term traders. We are looking in terms of trends. A trend is just a move of a sector or industry because there are a lot of buyers. There are big buyers there. That's why they push. And this is how we make our money. Okay? A calm market, when there is nothing happening, we don't need it because the stocks doesn't move that much, so you can't make that much money. Or they go a few days up, a few days down. We are not interested in those stocks. What we are interested in, according to my strategy, according to swing traders, according to short-term traders, we are looking for trends. Now, what did happen in the energy sector is that they began to talk that it is the best sector. They began to say something good. So all the beginners, they like it. This is the problem. Okay? This is the problem. And it means all the people know about it. So what does it mean everybody knows about it? It means that the trend has always or has come to an end. Okay? And who makes this trend visible? Is the analysts, is the TV, is the media. Now, you ask yourself, why? Why do they show you something which is good? It's just because the big guys want to begin selling. This is what we call a sell-off. They begin to sell because these mutual funds or these guys or big guys or brokers or banks or big investors, they have been investing for 1 year or 2 years or 3 years. They need to take their money out of the market. So what they do, you find all the TV media speaking about the same thing. Okay? And you ask yourself why. I don't say this is a conspiracy in the market, or it's just advertising. They advertise. They show you what is good, but good, although they don't tell you lies. They tell you the truth that this trend has been doing good for 2 years or 3 years. But the thing they will never tell you is that this trend has come to an end and it will be going down. So what the beginners do, because they are fooled with this news, and the news comes for many weeks speaking, and even the trend can go a little bit up because there are a lot of people, beginners, and they can see it. Those mutual funds, they are not stupid. They see the stocks they are in, and they see how much money they can accumulate if they sell, and they see how much money from the beginners are pushing the stocks. So they make calculations and they begin to sell. Believe me, when they begin to sell, everybody who is big begins to sell because they understand it's time to sell. Now, what did happen here? Poor beginners, okay, they wait for 1 week, 2 weeks, and they think they are doing an investment. This is the more tragic thing in trading and investing. Okay, they take something which has been going 2 years or 3 years, and analysts, they say it's good, it's a hold, just buy and hold, and the beginners, they try and they go ahead and they buy, and then the stock will be going down, or stocks will be going down, or the sector will be going down, and the people, they hold loser. And the mutual fund, they exit safely after let's say 1 week or 2 weeks or 4 weeks. It depends on who are in the stocks. And this industry, as you can see, or this sector, with almost all industries, they fall down. And you see what it happened. Okay? you see what did happen? And almost the people who are investing in oil and gas at that time, they have lost a lot of money. Okay? They have lost a lot of money, and most of them are beginners. Those who don't know what's going on in the market. So, for me, what I am presenting to you today is to understand the mechanism, how things work in the market. The market that you see on TV and the news, and it is something, and what's going on in the price is something different. Okay? And always the beginners say, oh, those on TV, they know better than me. No, they don't know better than you. Yes, they know better what is good for them. Yes, they know better than you. But the market, no one knows. Okay? No one will come to you and knock your door and you say, oh, come on, this stock is good, come on, buy it, and there is a sure thing it goes up. No, no one will say that, except in the media. In the media, they say that this has done so good, and always read the articles, see the news. Okay? Try just to see all this stuff, and you understand that there is a big advertisement when needed. Okay? Whenever they need to sell, they advertise. Whenever they buy for a long time, they advertise in order that you buy more and more, and the stock will be going more and more and more. And for them, the more they advertise, the more their wealth become bigger and bigger and bigger, and then one day they sell. Okay? And why a sector goes down and never stops? Why? It lost 40% or 50% or 60%. You find a lot of industries and sectors, they lose like this. They lose a lot of money. Now, who makes them go big and who makes them go down? It's the same people. Mostly are mutual funds. These are the movers of the market. They move the market, okay? And advertisement or ads in TV and in people who are talking about stock market, they advertise and they make a lot of money. Okay? And this is how the market is from its inception or its beginning until now. Nothing has changed. Always there is advertisement, there is a lot of information. It's always like this. So let's drink some coffee. Please, guys, since I am talking, I'm talking and talking, I don't stop talking. Please, if you have a question or you have something that you want to understand since we are going on, please ask questions. So, as I told you, someone asks me, oh, are we in a bull or bear market? This is the questions that beginners ask, because they think if it is a bull market, it means when they buy a stock they will make money, which is not true. Okay? You make the market that you are thinking about is the market that you are in by yourself. Don't go so excited if Facebook goes in a gap up, or Google go gap up, or any other stock go gap up or gap down. These are just news. If you aren't there, it is useless to know. Okay? It is useless because you are not making money. You are just, some people go online and they try to have fun of hearing about the news of the companies, which is going good, which is going bad. And this information you always find on the news, on TVs, on websites. You will find all this news because we have thousands and thousands of companies. Okay? The companies that we have, there are a lot, and each company has news. If you begin to follow companies like this, you will just waste your time the whole life, except when you are an investor. When you are an investor, it's better to check each 3 months. I say 3 months because we have the earnings. Check if your company is still competitive against the other companies in the same industry, and you see the industry, let's say, give you an example. Let's say you invest in a company. First thing you do is just go to each industry. Is the industry going down or up? It is very easy, okay, to check it. Check it, for example, for 1 year. Is it going up or going down? Now check your company that you are investing in. Is it going up or is it going down? You just compare, because the industry index gives you the general stocks, what they are doing. It means your stock that you are in, there might be some stocks that are better than your stock. It moves faster than your stock. It's in the same industry. Okay? If you see that the industry is going down and your stock is going up, that's a so good thing, because this is a hidden thing. There are some people or mutual fund or he is buying, and the news, they said that the industry is doing bad. So he is buying, so you don't see it. Now, how can you see this stuff? Is by using my search training. Either using stock screener or you use in industry index as in training level 3. So I have two training level 2 and training level 3. These are the basics of the search. Any stock that you want, especially if you use my my chart. Here I'm speaking about a USA citizen and Canadian citizen, because the chart shows only 2 countries. It doesn't show, and I hope if this chart will be including a lot of markets, that will be good for everybody. But unfortunately, right now, this chart doesn't offer this, and it's a broker. I have no idea if the broker is giving more information about other it means other markets in the world, because the broker is limited to the stocks that are has a relation with. Okay, because for example, let's say our brokers here in America, they are linked to, for example, to New York Exchange or Nasdaq or American Exchange. Okay, so these 3 major exchanges, but there are other small exchanges. It depends where is broker is subscribed to. Okay, but he cannot go and subscribe to Japanese stock market or English stock market or German, and there are no traders for him, so he'll be just losing money. He's just paying money for these exchanges without getting himself money, because understand the broker should make money from the commissions and fees. Okay, so as I told you, when you begin looking for the whole market, you should be looking the general thing. This is good in general. If the market is in a bull market, it means you see that the indexes are going up. Okay, so understand something, for just to show you something. Why the whole indexes, the major 3 indexes in USA, they go together? Why? Why, for example, Russell 2000, why this doesn't go down and Dow Jones, for example, goes up? Why is that? Why they are all, there is a balance. They go together up, they go together. Because this is the thing. Okay, a stock will be going up or down, so there should be one thing, but it's the same players. The same players who are in big indexes, small indexes, or industries or sectors, they are the same. And all these are the big buyers of the United States of America. Okay, Hello, Muhammad Al-Hor. We are at midnight here. We are 11:30, so we are at night, but it's good. So, as I told you, it's better that we be in a good market because most of the stocks they go up. Okay, and your job is just you go and you search for better stocks. Now, opportunities in stocks are daily because the stocks not all the stocks they go on the same day. According to my strategy, you will see that a lot of stocks each day they reach a signal and they begin to go up, and then you can make money from them. Okay, so if you want to buy and you have money, whenever you search, you can find stocks. Yes, sometimes the stocks are different from day to day, or some they are stronger than others, or some they move faster than others. You can check that. Okay, you can check that in the chart, and you see how fast they are going, and you can check the risk that it is associated with these stocks. So, understanding the whole picture, beginning from general indexes and going down to sectors, because sectors are not the same. Okay? And when you read about sectors, they say it's just because these businesses they lose business, that's why the sectors are going down. Okay, they say they lose business. So you know, they give in the market, when you go to find information, they give you fundamental information. Okay, fundamental information, it means they try to see what's going on in those, and they give you an information or a reason. Okay, but who buys and who sells as mutual funds? Okay, you will never find that in what they say. Okay, because they don't know, and no one knows. Now, how we as a swing traders or short-term traders, we know about something? It's just we see it in the chart. The price doesn't lie. Okay, you, for example, you find a stock, it's $10. It goes to $15. Let's say you find it, you buy it, it's $15. Now, do you think when you go to online, you will find someone telling you that this stock, you should buy it because there is a signal, or because this company is good? No, no one will tell you that. Okay, so stop looking for some people who give you what's going on in the market and which stock will go up, which stock will go down. No one knows. So the most important thing you do is you do a decision by yourself. You should be independent trader or independent investor. Don't look, you can look at the news, you can look at the information, but this will alter or will change your opinion. Okay, because you think that there are some people they know better for the future of this company. Okay, there is no guarantee. Whatever stock, whatever company, there is no guarantee whatsoever. Okay, the company, it says good about itself because they don't want to say bad things, because if they say bad things about the company, the stock will be going down and investors lose money, so it's not in their interest to say bad things about their company. But once something very big happens and it's too bad, all the people will know about it, but you will see it in the price, because the price gives the mood of the traders in the market, because this market is by mood. Sometimes the mood is good, all the people are buying, and a lot of people make money. Sometimes the mood is bad and all the people are selling, all people are scared, so a lot of people they lose money. Okay, so this is in general what I'm telling about sector and industry rotation. So please, if you have questions, you see, today I don't see a lot of the people that are I don't know if today if there is something like a holiday or something. I don't know. There are a lot of people I don't see. I see it each week except for this one. So how this change? I continue with the example of energy. And then the energy stays like 1 year and 1.5 years going down. Okay? And then it's going up. It's made like I see one of the for example industries making, for example, 75% from the bottom. When they stop and they go up, they make 70% for percent or 50% or 60% or 80% depending on the industries. Okay, so sometimes when an industry is going down, a lot of mutual funds they sell it, but at certain time, 1 year or 2 or 3 years ago, 3 years after, a lot of mutual fund they do the opposite. They buy it again, but they buy it when it is so cheap, although they sell it when it was so expensive. And they will do the same game. They will buy, but they will never in the news. If you go to the news, they will not talk about this, okay? Because it's not their interest to tell you, oh, it's going on. You find the information, but they don't insist. People who are investors for the long run, if they see an opportunity, they just buy and wait. It's a lot of wait. It could be 1 month or 2 months or 6 months. They will never know where it's going on, but they wait. And since they wait, it's not time that brings the money. Okay? It is the momentum. It means when you are in the right time to buy. And this is especially when the stock is going down, the support line, or when it goes down and then it stops and then it goes up. This is what we call how to buy the stock from the support line, which is the most difficult. Okay? Difficult because you will never know that it is the last support that the stock has, or the last support that an industry has, or the last support that a sector has, or even the index, the big index. You will never know. Okay? So you need from you to risk more, and you will never know if you succeed or not. So, but if you have a conviction and you see the chart and you understand that it is the beginning of a trend, you should buy and just wait. Okay? There is no a lot of people, they think that some people, they know for sure that it is support. No one knows for sure. But the people who are serious about the business, they buy and they wait. Waiting, it means that they know that there is a lot of volatility. Stock go down, up, go down, many days go up, many days go down. So they don't bother, they are not bothered about that. Okay? But they will wait 1 month or 2 months or 3 months and see if there is a real beginning. That from where they buy and the support line, they see that the stock is continuing to go up. And this is the good thing. And this, you need to have conviction. Conviction, it means you are with the risk and you want to do it, and you do it. and you say to yourself, even if you lose money, it's okay. Because making money, you should attempt to buy on the momentum. If one of your trades be good, that's it. You don't need in the year, you don't need thousands of trades. You are not a day trader. Okay? You are not a day trader. You are a short-term trader, or what we call swing trader. You follow trends. Okay? For example, I have a trade that I show live in training level 7 and in the subscription. I bought the stock on the 1st of May. Do I know that this stock will go until now? Which is, so May, June, July, August, and September. Okay, understand? It's May, the 1st of May I bought it. May, June, July, August, September. It's 5 months. Do I know that this stock will go 5 months? No. I have no idea when I bought it. I bought it on the momentum, on the signal, and it's like the other stocks, it's good stock, so I bought it. But I stayed 5 months. The stock goes from $13 something, now it's 22 something. Okay? So it is a big deal. I have a lot of money made in this stock, and I will not exit until I see that the stock has stopped giving money. I'm still in. That's why yesterday I made lesson 22. Now, why I show you this trade live is just to have confidence that if you know how to deal with the stocks, you can make a lot of money, and don't worry about anything else. Okay, when the stock goes up and you are making money, you are happy with that. You still make money, and when you see signs that the stock is doing bad, you exit with a profit. That's what we are looking for. There is someone who asked me, I think last week, about is there a percentage that we should use and then we exit? I will answer that. Okay. One of the guys last week, when we are in the chat like this session, he asked the question that he has followed a guru, or he read a book, or I don't know what they say. He said, this guy tells you that it is 10% sell. I told him, okay. Okay? Let's take my example. The stock that I am in right now. And I show live. And I make videos, and I showed you how to follow the stock. If I put 10%, I have already sold the stock. Because I'm getting from 13 to 22, I will be getting like $9 out of 13. 13 is the stock, so I'm getting 9. 9 out of 13. Okay? Now, it's nearly 75%. Nearly. Okay, I'm not sure about the exact, because I didn't exit yet. So let's say it is 75%. Now, I answer you with my example. If I use another people's technique, another guru, okay, I don't know if he trade or not. They say, oh, any stock, 10% just go out and that's it. Who tells you this? Okay? He is against of one of the principles of trading, which says to you, let the profits run. Now, what does it mean, let the profits run? If the stock is still giving you money, why you want to exit? Because when you exit, after a few months, you will regret it. Now, I'm not speaking about someone who used stop loss and he exit. You can buy it again. There is no problem with that. Because people, they think that you exit from a trade, it's the dead end. Man, it's you who puts the stop loss. Okay, you do a mistake and the stock reaches stop loss and then it goes up. Okay, buy it again. What's the problem? Why some people are scared to buy something good? Because the stop loss is just to show your risk that you can't go after that. Because someone told me, oh, what if I put the stop loss lower? Okay, and I will tell him, is there a guarantee that the stock in the next days doesn't go to your stop loss again? It goes down? He say, yes, it might be so. I told him it's the same problem. So, stop loss is only used to assess your risk. It doesn't mean that it is that the stock will never reach your stop loss. It will reach it sometimes, but if you see the stock is good, okay, why not to buy it again? Okay, you can buy it again, and if it continues to go up, you will be making money and you follow the trend again. Because understand that following the trend is a difficult skill. It's not easy. Okay, it's not easy. Some people, let's say, who tells you, oh, I don't want to use stop loss. When the stock is going up, I will never put stop loss. Okay, but what if the stock is going down, when to exit? So if you don't know when to exit, it is a real problem. Especially when the stock is going down. Okay? When the stock is going down, you should have techniques to show you if the stock can stop or stops going down and go up, or the stock continues to go down. If it continues to go down, that means you will be losing all your profits and give it to the market again. Okay? So it's a bit tricky, this following the stocks. Some stocks are easy, some stocks are very difficult. So it's a very difficult skill that you need through years, through months, through years. When you do and you follow you will have experience. But experience is based on the techniques that you study. Okay, it's not just for example, experience by time. Time is a factor, okay, which is a good thing, but it doesn't mean that you are making money or you're getting more experience because of time. Okay, if you stay 10 years and you are losing money, time is not experience for you, okay, because you are doing the same mistakes and you have the same performance. So time is not by itself a fact that you have experience. You should correct your mistakes. This is experience. It means you change your performance and you do good. Now, as we are speaking about sector and industry rotation, okay, some people they are not aware of this change in the market. Okay, there is a whole thing change about the sector that you see is going up for a long time. Like for example, I think the beginning of this year, we saw, for example, those who follow me in the subscription, we saw, for example, utilities. 6 months, if you see utilities in one time, 6 months they are going up into a straight line. When you see this, you will never believe. But 6 months, you or other people, you have never bought a utility stock. It's just because you don't know how to search. Okay? if you search, you will find that these stocks were going up at that time. And this, it is just opportunities in the year. And some people, they think that, for example, utilities begin in January last year, or this year, or the other year. They will wait for January and they begin to buy utilities. No, it doesn't work like this. Because mutual funds, they play. One time they are in utilities, the next year they are in drugs, the third year they are in financials. Each year they are in some, and they sell some. So you should know how do they move. And this move is very simple. Is when you do the search, you will see it. You will see the industries that are going up. You will see the industries are going down, and you will see the mood in the price, regardless of what the people say online. Because if you go to watch TV and you have entertainment, that will be a real problem for you, because you get more information that you don't need, and it doesn't constitute money for you. The best thing for you to do is when you buy something on a signal, you wait, you follow the stock, it's going up, you make money, and exit on any time. It means when you see money and you want to exit, there is no one who stops you from getting the money. But understand that if you know how to follow the trend, you can make more and more money than before. Okay? So thank you very much for watching. I hope today it's a very calm day. I didn't see any question, and all the guys that I saw the other weeks, I don't see them today. It seems that there is something today. I don't know about it. So is there someone who knows what's going on today? Which is typically strange today. Okay. So I will continue speaking about this for until 1 hour, and then we will see if you have some questions. At least I answer some questions. Now, another thing that it is so important is that sometimes there is a big change in the market. You can see it in the big indexes. Let's say big news. As you can see right now, in the North Korea crisis and Venezuela crisis, and there is hints of war. You know, there are a lot of stuff happening internationally. So this can affect the market at any time. Okay? And understand that when we talk about sector or industry rotation, it has to do with Nas Dinanochi, you say you like to listen. Oh man, just ask a question. Let me stop talking for 1 hour, okay? Okay, no problem. I will continue talking, and you listen. So as I said, let's say mutual funds are selling a sector. If you put sectors in one day, like I have shown you, I think in one of my videos, I put a portfolio of indexes and sectors. You just either check the chart that we are using, check each industry, each sector, just check. What will happen is that you see some industries going up, some industries going down. You will begin to understand that your money, if you want to make money, like going long, it means you buy and you think today I I have lazy listeners. They just listen. They don't ask any question. They don't write anything. Just listen. Okay, no problem. No problem. I will do that. Okay, so you will see in sectors that they begin going down. They stop going up. Now, what does it mean for the industries? You go to each industries and you check which one is going down. If you find a lot of stock, a lot of industries going down, it means that there is a beginning of a downtrend. Now, if you are buying this kind of stocks, you will be having a lot of losers. This is very simple. The whole industry is going down. You don't see it because you don't search. That's why I put training level 3. How to search for stocks using industry index. The index shows you where the majority stocks are going in industry. It's the same as a stock. You see the index as you see the stock, and you apply my criteria of my criteria that I use. It's the same thing. If the sector or the industry, let's say the industry is stops going up for, let's say, last week, it is, and now it's going down. If it continues to go down, that means that almost all the stocks in that industry are going down. If you buy one of these stocks, you understand that you will be losing money. This is as simple as that. Without going online and you search for the reason, because what is the reason? No one will tell you the reason, because a mutual fund doesn't tell you the reason. He just wants to sell those, and he is buying another industry. Now when a mutual fund, he will be selling, he will be buying from another industry. You see that the other industry is going up and this industry is going down. So in your opinion, which industry you should be if you are going long? You should go to that industry going up and check the stocks and see the best stocks and you buy them. This is how what we call industry rotation works. It means, and there is a movement. There is no one who will tell you. I'm telling you. You need to work. You need to have a portfolio of stocks or indexes, and you follow them. Okay, there is no need. Let's say one time with this energy sector where everything is going down. Why you go to energy sector and you want to buy? Yes, you can find one stock or two, but it is rare. Okay? Don't be against the trend. If the trend is going down, it means there is a big sell-off coming and the stocks will be going down. So when you don't have money, you have little money, you buy few shares, 100 or 200 or 500 shares of a stock, and you are so weak, you can't stop mutual fund when he is selling. You will be a big loser. That's why you should always take a look at industries or the industry that you are in. What is it doing? Is it doing good or is it doing bad? Sometimes the stock is doing good and the industry is doing bad, which is okay. If your stock is going up and you are making money, it's okay to wait and don't bother yourself to look at anything else if you are making money, because you will never know what the mutual funds are doing. Okay? Mutual funds managers, they are a lot, and each one is doing his own business. He will not tell you, he will never tell you what is good and what is bad and what to buy and what not. And this is all secrets of the market. So if you follow the price, you will find the secret, you will find the reason that someone is buying. This is what we need. We need to see a stock going up. That's it. We don't need someone who explains to us who has bought the stock or why or who are the mutual funds. This information we don't need. For me, as a swing trader, as a short-term trader, I don't care. I don't care what this company like is doing. Okay, it's doing selling medicine or selling some, but I am not worried a lot about what it's doing. What I am worried about is its a price. Since I have bought it, is it going up or down? Am I making money? Yes or no? You should ask yourself these questions. These questions, if you are good with it, your stocks are going up, you are making money, what do you ask more than this? You will ask no more questions. You will not go to some websites or TVs, and this is entertainment. For me, believe me, when I want to be entertained, I go to check how the people pan for gold, or I go to search for coins, okay, or I go hiking for some national forest. This is what I do for my leisure or my fun, or what I do as hobbies, okay. So I do something that it is not related to the stock market, okay, because I don't want someone from stock market tells me what to do, okay, because I will be the victim of their news. You will be the victim. It means you listen to them and you lose money, and each time you come to lose to watch them again, although you lost a lot of money because of what they say. And there is something which is very, very important. Some people think that when they watch a lot of TV about stock market, whatever is the channel, they think they will know more. You will know more the things that you don't need, okay. If a company, you say, yes, this company is good, last year the stock made 50% in change of the price. This is because the company has done this and done this and done this and that. Okay, now for me, am I in that company and I made 50% until today? Yes or no? If it is yes, it is good. It is good just to have fun and understand why this company is doing good. But understand in real business, it's a mutual fund who bought this stock more than the stock is going up. It's not because of the company is doing good. You go to other companies that are doing good, they are making a lot of money, but the stock is going down. Okay? So try not to be an investor and a trader at the same time. Try to focus on what you do. If you are a day trader, you should focus on day trading, on news, on this has nothing to do with sector industries. Okay, day trader is looking for the news, any news on the market. This can help. Yes, I'm telling you, if you are doing day trader, you should go to the market in the morning, see what's going on before the market opens, see what's moving up, what's moving down, and you can take opportunities if you are doing day trading. This is yes. But for us, as a swing traders, we don't. For me, I have never seen the news of the company. Never. I have never seen the balance sheet or this stock that I am in for 5 months. Do you think I have gone and checked the balance sheet, or I want to understand why this stock is going up? No, I don't care. I don't care what it does. Well, for me, if I'm making money, this is what I want to know. Okay? So, thank you very much for watching. I'll be drinking some coffee until I get some questions. So, yes, Empty Mind says, people buy all things by advertisement on TV. they buy stock the same way. Yes, it's true. It's true that that people, they get advertised a lot, but understand, in the stock market, it's an investment, okay? And those people, mostly online, they say you good stories, they say you this, but they influence your decision what to buy. Your decision should be based on your knowledge about the market, not about the advertisement. And this is something very bad happen, but you know, some people, they make money from it, okay? This is why we have TV, and we have, if those TV, the people, they stop watching for one day, they lose almost all their business, because the people, they will be not, they will be neglected by the people. For example, right now, most of the people are in Facebook. If they want to buy something, they are on Amazon or eBay or some big buys. Okay, Amazon, for example, they are there to search for things, to buy, to sell, to do some stuff. Okay, so things have changed, and the people have changed, and now the people are with apps. They do the same things. They advertise where the people are, okay, with the smartphones. So, and even some brokers, this is the funny thing, they know that it's very hard to compete in the real market. They go to making app, and they go to Facebook or to Amazon, and they give their services in order to sell more. Okay, so you know, the market has always been changing, and in the market, I'm telling you, there is no help, because no one knows what will happen. For example, you ask, oh, what, I see, for example, I go to the library, in the section of, let's say the section of trading and investment, and you find books. Let's say the 10 stocks you should buy this year, 2017. This is funny, because the people, they wrote books, okay? They use, for example, fundamental information, and they publish books, and they are sold. Millions of, it's just because these people are very famous, and they sell what they want to sell, okay? And does it true that these stocks that mentioned in the thing, they go up? It's just because they see last year that these stocks have done good. They think that this year it might be some of them do good also, so they write a book. But since they are famous, they can sell whatever they want, okay? And understand that the famous people in the business world, whatever is the business, they make an impact on people. What they say, they are sold. Whatever they say, and they can companies, they can give him money also, okay, to advertise for them, and this is business, okay? Everything is business right now. So for me, if someone wants to learn, let's say to learn how to trade stocks, he should learn the right way and focus on learning techniques and applying them in the market, and then the performance will change. Even if you don't make money and you stop losing money, this is a big beginning. It doesn't mean that you right away, you take a training or you take strategy, that right away you will be making money, because you have a lot of problems, a lot of mistakes that you do and you always do. So you should get rid of all these problems in order to change your way. When you change your way of looking at things, and then your trading performance will change, and then you will be stopping from losing money, and then you begin to see the money, and then after a few years you will be looking at the money. At that time, when you are a good trader and you begin to know what's going on and you always look at the momentum, what is missing from you is money. You need more money. If you have $5,000 or $10,000, whenever you go and search, you find stocks, but you don't find money because you have bought some stocks, and you will find other opportunities because the market gives opportunities daily. Okay, because the stocks move daily, and those that are good, each day you find some. Okay, so and this is how things work. Things are changing in the market. It doesn't stay where it was. That's why you should, if you buy a stock and it's good for you and you hold it and you make money, stay holding it until it stops giving money. And this is what I did in my live trade. 5 months. 5 months is a big time. It means 5 months. But for me, do you think I am worried, or I want to get my money quickly, or I want to sell now? No, I don't. Even if this stock stays 1 year, I don't sell, because when I find a nugget, like we say gold nugget, when I find a stock that like this, I will stay until I see that the stock is not giving any money, and then I exit. And stop loss is always there, that I take my profit. And this is in the year, you don't need hundreds or thousands of stocks. I find someone who has like I think $12,000 or $14,000, and he buys 22 stocks. I say, man, why you buy all these kind of stocks? It's too much. According to what you have, you should minimize what you buy, because at the end of the year you will have to pay a lot of commissions, and believe it or not, commissions is the #1 of your losses to your profits. Your profits go down even if you make money from stocks, but because you make a lot of trades, you will be losing a lot of money from your profits. Instead, for example, you are getting 20%, which is a very nice percentage each year. Then you find it's 5%. Okay, and then you say to yourself, what's going on? I have made good trades. Why my money is little? I don't see it. It's just because you trade too much, and you don't see that. That's why I made training level 17, how to fix your trading problems. A lot of traders, they do a lot of mistakes, but unfortunately they don't know that they are doing mistakes. They think it is just fees are just commissions and fees, margin account, that's it. No, there are a lot of problems that you will be in, but you don't know it. You don't know this kind of problems. So you are doing these problems and you don't know. And these problems will affect your trading performance. So as I told you, our subject today is about sector industry rotation, and this is a very, very important subject, but most people, they ignore the things that show them the money. Now I will give you a simple example about why is industry or sector very important. If you have a general idea, let me drink some coffee. I told this example last week or the other week, I don't remember. If you want to prospect for gold, this is just an example, okay? Let's say you are searching for gold. If you know that there is a place where there is gold, like gold mine or a gold bearing place, and a lot of people, they know it, it's better to go there and prospect for gold, or you go to some place, a desert or forest that no one has heard any news about gold, and you try to search there. This is the example that I give because at least you understand that if an industry is going up, there is an opportunity to make money because a lot of stocks are going up. You just choose what is the best, the one that you like. For example, if there are stocks like $80, there is 50, there is 10, there is 20, you choose the stock that you can buy, and you buy 200 or 500, 1,000 shares, and then you go with the stock. If the stock, just today, one of my students, he bought a stock around $10. Now it is $14. No, now it is $16 something. And he showed me where he put stop loss, and he showed me what did he do. I say to him, man, you are excellent. It means you are beginning to learn, and if I find this stock, I will do the same. He was very happy with that, and he understands that he is beginning to learn my strategy very well. It means you should buy on momentum. Don't worry if you buy some stocks and they go down and you lose little money. This is part of the game. Okay? You should understand that. There is no one who is buying a stock and it's going up for sure. There is none. And if someone tells you that he has 100% or 90 or 70 or whatever, okay? Most of the people, they just say what they say. Okay? They say, okay? And in the market, it's not true. The concept to make money, I put it in training level 5, how to make money from stocks. Okay, this training level 5 gives you how I make money from the market. It is not because of the winners and the losers ratio. This is false. If he tell you I made 70% winners versus losers, this is not counting as making money. He can make 75% winners, but he is losing money because the real thing, it is not in the winners and losers. It's something else. Okay? So, as I told you, when you are searching, it's better to search if you are doing this, which is training level 3, how to search for stocks using an industry index. If you like to have companies that you know and that you like to buy, this is very good opportunity to put them in the list. Let's say you always search and you find that you like 10 or 20 stocks, companies that you like, just you like because whatever is your reason, it's not important. But you want to buy these stocks. You can put them in the list, and whenever they reach a signal, you can buy them. If they continue to go up, you will be making money. As easy as that. And this I show in training level 3. For those who don't know how to use an index and how to use the stocks, it's the same as training level 2, how to search for stocks using stock screener. It's the same thing. It means the same criteria that you find in training level 2, it's in training level 3. This is manual. Manual, it means you need to search by yourself. You put a portfolio, you put the indexes that the stocks are. For example, you are looking to buy, let's say, Facebook, okay, and you want to know when to buy it on time, so you put this stock in your portfolio with other stocks, and then whenever the opportunity comes and you get my signal, you just buy, and then you put stop loss. If the stock goes up, you will be making money for sure because it's going up above the price that you bought. Okay? If not, if you don't succeed, don't worry a lot because you will never have 100% sure thing. There is no, and it doesn't exist, and don't search. Okay? That's why some people, they go and they buy what you call trading software. A software that it is okay, a small strategy like this, and you put it in your account, and it will wipe out your account in a few days, and you lose all your money. Okay, trading is a human, so when you trade, you should see what you are buying, why you are buying, and you see the momentum, you see the criteria, you see if it succeeds or not. Because if you, for us, it's very easy. You buy a stock today, tomorrow you will see. If it's going up, you hold. But if it's going down, you understand that it might be a loser. So now, as we spoke about the stock market, indexes, this gives you a general idea, okay? And sectors and industries gives you a general idea. The more you go down, the more it is more specific to your stocks. And for those who use my chart, it is very good because you will have all the stocks, all the indexes, all the sectors. It's all used by Morningstar, which is the company that puts these stocks into groups and industries and sectors. I talk right now about something. Let's say the coming weeks, the whole market begin to go down. What you should do? In training level 18, how to short the whole market, all these indexes you can buy an ETF, which is an exchange traded fund. And when you buy it, if the index is going down, this ETF will be going up, and then you can make money. It means it is shorting, but you don't short the stock, you short the index, okay? And you short the index or the sector or the whole market or one of the indexes, okay? This is in training level 18. If you are interested to look after these industries and sectors, you just take the training and go to the market, search for these indexes that are going down, and you can make money from them. But you should begin with the beginning. Don't leave the index going for six months down or 1 year, and then you go to try the strategy, because the strategy, it has momentum. It means whenever you see an industry going down and almost all the stocks are going down, this is an opportunity to make money from it. It means always I'm speaking about momentum. Momentum is the right time to buy the stock, either when these industries and sectors and indexes are going down. It should be from the beginning. Don't wait until few months, until you are everybody. Yes. Ricochet and CC is called inverse ETFs. Yes, it means don't let things go down so good and then you do it, because this strategy doesn't work like this. It's like when the stock is going up, you should buy it where there is no trend apparent, because understand, if there is a trend, all the people will see it and it will be volatile and it will be a lot of problems. But the trend should be hidden at first. No one will see it. You only see it when you search for it. Okay? When you search for it, you will find. If you succeed, you can make a lot of money, because you are with the first guys to discover it. Okay? But if you come at the end and you want to do the strategy because you like the trend, this is what the beginners do. It means when they see a uptrend, a very long trend, they want to enter because they like what they see. But it might be the end of the trend. Okay? Even the stock is going up or going down, it's the same thing. Okay, it's the same thing. So you should begin with the beginning, where there is no visible trend. No one will see it. Just you see it because you use my strategy, you use the search criteria, and that's it. Okay, so thank you very much for watching. I will be waiting for a few minutes, and if there is no question, I will try to stop and see you next week. Okay, so please, if you have questions about this, I understand that some people, this is the problem, when they see like a subject like sector and distribution, they think that it is not it's not something directly related to buying and selling, and this is wrong. Okay, this is wrong, because these things that the people they neglect is the things that makes the money, but they don't understand. Okay, they think they're just buying which stock to buy, as if someone knows what will happen in the future, and this is wrong. Okay, so if you have some questions related to this subject or another question, I will be here for a few minutes, and I can answer your questions. If you don't have any question, we can stop this session. So I'll be waiting just for you guys. Although you have my email and my website, you can just send me an email whenever we finish this session. So thank you, Rikoshi and Sisiti. Thank you very much. You know, the market, it changes a lot, but sometimes the trend stays long, but the people, they don't see it. When the media comes with you and it tells you, oh, this sector has done last year so good, and you go at that time and you buy this sector stocks, which is worthless because the trend has finished. Nas Dilonacci says, does the company's earning affect the rotation? Sometimes when there is like good earnings and the stock have a gap up, if the stock continues to go up, that's a good thing, that the earnings will help you, make you money. But sometimes the stock is going down, and then we have a gap up, and then it continues to go down. All the gap up because of the news. So the most important thing when you see a gap up is do as I explain always. If the stock goes above the high of that gap up, it goes more, you can buy it and it's very good. But if the stock after that the gap up go down, it is no buy. Okay, until we have our entry level. Thank you, Andreas, for thank you Dasinarchi and Rikoshi and all the people who are here watching this. I know this subject today is a little boring, I know, but as I told you before, it's like when they say a gold mine. When you know a gold mine, you go search there, you make money. So the people, they want to know, where is this gold mine, and is there true gold like nuggets, and they can become rich very quick. This is what the people are thinking. Now in life, things are harder than you might think, and there is no sure thing. So the people who risk their money and they make money, okay, this is the people they succeed in life. So the people, they have money, They don't want to risk until they see a sure opportunity. There is no sure opportunity. Unfortunately, in the stock market, there is no sure opportunity. There is no someone who tells you this stock will go up or will go down. When I do my search in subscription, I say to them, this is a buy, or this is a sell, or this is not, but put stop loss. If things goes well, you will be making money, but if not, the stock will be going down, so it is a loser. So don't worry a lot. Don't try to regret things that you do, because in the market, if you do something and you succeed, you will be making money. As this guy I told you, today he sent me an email. From $10, it goes to $16. This is a big money. He has made more than 50%. It's like 60%. Understand, 60% in 2 weeks or 3 weeks, it's a lot of money. Okay? But this guy is just find the stock, buy on momentum, it goes up, so he will be making money. It's so easy as that. It's not a big deal. Okay, thank you very much, Dasunorichi, and thank you. Yes, I am always here for you guys. If you have a specific question and you don't find it in YouTube, or just send me an email, I will be happy to help you at any time. Okay, so since we finish this session, thank you very much for watching, and please, if you have some subjects to tell me to do next week or the other week, please let me know. Thank you very much.